And so really I position myself in Garofalo Corp, anticipating that the established producers and the emerging producers will have to start to allocate significant capital to mine development and exploration. And we're there to effectively act as a bank for that type of activity.
Welcome to the My Future Business Show, where we get you in front of your best audience and keep you there. Not only are we interviewing the biggest names in business to help you become even more successful, we're inviting you to book your spot on the show to help you grow your business. So at the end of the call, make sure you fill in the interview application form at myfuturebusiness.com/interviews.
Hi and welcome back to the My Future Business Show. My name's Rick Nusky. I am your host, and this is the show that gets you in front of your best audience and keeps you there. Now on today's call, I'm with the wonderful David Garofalo. I knew I would get that wrong. My apologies,
That's
David.
All right.
I've been practicing it for so long now. David is the CEO, President, Chairman and Director of Gold Royalty. And we're going to be talking about not only Gold Royalty, the organisation, but we're going to be talking about gold. But before all of that, David, I'd love to spend a few moments learning a little bit about you. Now, traditionally, I guess you'd say, we'd learn where you're located. Where is home for you?
I'm in Vancouver, British Columbia. But I've been in Canada my entire career, spent the first 50 years of my life in Toronto before I moved out here to run Gold Corp about 5 years ago.
Fantastic. Now, do you have any time away from work? And if you do, what's your leisure time look like? What's that involve?
Well, it's hard not to enjoy the outdoors in British Columbia. The skiing is fantastic in the wintertime, cycling in the summer, and hiking is incredible. I live in the rainforest on the north shore of Vancouver, and on the mountainside, so it's hard not to enjoy nature here and take advantage of everything British Columbia has to offer.
Yeah, I wonder, is it important for you, being so busy, to take time away from the workplace?
Absolutely. I mean, trying to stay physically fit, to keep the mind clear, I think is extremely important. It's always been an important element of my work regimen over the course of my career.
Yeah, fantastic. Now, I love movies. I don't know if you love movies. Do you like any movies? Are you a moviegoer?
I do. I have to say I'm a big Humphrey Bogart fan. I've seen every movie he ever made. So I look like old black and whites. And in terms of the more modern cinema, Francis Ford Coppola, The Godfather, the number 1 and 2, and Apocalypse Now. Those are some of the best movies ever made.
Excellent. I would have to agree with you. Now, in terms of growing up, I also love to learn a little bit about our time when we were children and our formative years, I guess you'd call them, David. What do you remember about growing up that is fond for you?
Well, I would say it's growing up with a large extended family. Both of my parents had 4 siblings, and as a result, I had 31st cousins growing up.
Oh, wow.
All lived in the same neighborhood. And and we all, my cousins were my friends, my best friends, and still are to this day. I'm in touch with virtually all of them. And we grew up playing typical Canadian. We're first generation Canadian. We come from an Italian family, immigrants, but we played road hockey and all sorts of sports together. But I remember playing on our street, and we all lived in the same neighborhood. Growing up. And interestingly, even though our parents were immigrant laborers, all of us went to university, and many of us ended up becoming corporate leaders. One of my cousins was the head of Deloitte Canada. Another one is the head of a major law firm here in Canada as well. Another one was chief actuary for a major accounting and actuarial firm as well. Another one was the head of ophthalmology for a major hospital in Toronto. Wow. And they all came out of that immigrant class, which is kind of a typical Canadian immigrant story.
Yeah, it is a success story, isn't it? I came with nothing and here I am. And in those early years, David, you've obviously been hanging around the right fruit. Who stuck out for you in your early years? Who was, I guess, a bit of a mentor in your family or even your circle of friends that really helped you become the man you are today, do you think?
Well, look, I would say in the mining space, and I've been in the mining space for over 30 years and joined a mining company right out of Deloitte's when I just completed my CPA here in Canada. And I was introduced to a gentleman named Richard Ross, my first boss. And Richard was a young controller at the time, and I was a young accountant doing consolidations. He rose eventually to be CFO and then CEO of Inmet Mining, my first employer in the mining space.
Mm-hmm.
And he taught me everything I knew about the mining industry, and went on to run the company for 10 years through the early part of this century from 2000 2010 after I had left. But we grew up in the industry together, and he taught me a lot, and he still remains and will always remain my mentor in the space, though I've had many other mentors in the industry for sure.
Yeah, thank you for sharing this, David. We have a lot of startup entrepreneurs and small to medium-sized business owners listening to this. We have investors, a whole range of different listeners listening in, and it's always important for them to get a bit of an insight into you as a human being. I'd like to know, being so busy, how do you look after yourself? What does a daily routine look like, and is it important to look after yourself?
It is, absolutely, and I have to say this pandemic and how I've set up myself from a work perspective has allowed me a lot more flexibility around physical fitness. Mm-hmm. And so quite often I'll take 2 hours in the day at some point, whether it's the middle of the day, beginning of the day, end of the day, just depending on my work schedule, to either cycle or trail run with my dogs, and get a good amount of physical fitness in over the course of the day. And it energizes me because I do have business interests across the globe. I deal with Asian partners as well, and quite often I'm on the phone quite late into the evening. And so you need to sustain your energy. So having some physical fitness every single day of the week is an important part of how I operate.
Now, David, you mentioned dogs. I'm a dog lover myself. What sort of dogs do you have?
I have a Labradoodle who's 11 years old and a Portuguese water dog that's 5. Oh. And my sister's from another mister, but they do get along really, really well, and they do everything together. They sleep together and they run with me together, and it's fun to have them around.
Yeah, you tell them your deepest, darkest secrets too. They're always there for friends and always smiling, and looking forward to seeing you. Thank you for sharing. Now, in terms of your role, what do you love the most? What fires you up?
Well, to me, it's developing people and putting the right bums in the right seats, honestly. And that's always energized me since I've taken on C-suite positions really over the latter 15 years of my career, or actually almost 20 years now in various C-suite roles, is recruiting the right people for the right jobs and then helping them develop into, to achieve their best potential. And there are more than a few C-suite executives in this mining industry that have worked with me at some point. I'm super proud to see them flourish. I feel like I had a small part in developing them and putting them into the right roles so they have the right skill set to achieve their maximum potential.
Yeah, that's a wonderful response. Thank you. Now, I know that you sit on a board of directors for many different things, and I've been doing my research, and I noticed that you are having involvement with the Vancouver Symphony Orchestra. Tell us a little bit about that. That's very interesting.
Well, I'm the deputy chair, and it's interesting. When I moved out to Vancouver 5 years ago to take the Gold Corp job, most of my volunteer board positions had been in the healthcare sector, and I felt like I'd had my fill of it doing that for many years. And I said, I want to do something on the nonprofit side in Vancouver to integrate myself into the community here, but I want to do something I know nothing about. And the obvious one was the symphony, because I can't keep a beat to save my life.
Me too.
And I have no musical skills whatsoever, but I thought, wow, would it be interesting to understand the business of music? And I have to tell you, I've learned a ton doing that. I've expanded my horizons. I've learned a lot about the creative sector, but I've also learned about the business of the creative sector and how it operates. I mean, and business is business at the end of the day, but having a creative element to it just adds that dimension that I hadn't had before.
Yeah, that's wonderful. And now you sit on a number of different boards. What are those? Are you still involved with them?
I'm on the Vancouver Board of Trade board as well. And again, that was part of trying to integrate myself into the business community here in Vancouver as I try to establish myself. And that covers off my nonprofit commitments. And in terms of public company, I'm the non-executive chair of Great Panther Mining Limited, which is a diversified gold and silver producer with operations in Brazil and Mexico, with a very capable management team that I helped to recruit and a very strong board that I helped assemble. I'm really excited about their prospects. And then, of course, I'm running Gold Royalty Inc. And serve on a couple of other public company boards, but those are my principal occupations. I also run a precious metal investment fund with some Chinese partners. Marshall Precious Metals, and we're investing, it's a closed-end fund that we're investing in early stage exploration on the gold side. It's something I've always been a big believer in. Even when I was running large mining companies, I always had an incubator fund set aside to outsource our exploration. I recognized that established producers really didn't have the skill set or the risk tolerance to conduct grassroots exploration. So supporting the juniors seemed like a good idea because that helped populate our pipelines in the long run.
Now, you've had a lot of experience, and I know a lot of people give me feedback about how much they take away from the show when people say, hey, look, I learned this from failure. What can you tell us about failure? How important is it in your growth?
Yeah, look, failure is important. And failure in our business comes through the low probability of success on exploration. Recognizing probably 19 out of 20 times you don't succeed. That's just the probably the highest risk component of the value creation equation or chain in the mining business. Recognizing that that low probability is just part of it, and having a diversified approach towards exploration is extremely important to that. And then you put a lot of projects through the study phase, and sometimes they don't turn out to be feasible, at least in the first instance. And it's being persistent and resilient and coming back to those projects and revisiting them and putting more capital into them in the study phase and the exploration phase to make them economic. Mines are not found, they're created, they're made, and they're made through a lot of sweat equity. And also some meaningful investment in the exploration and feasibility work.
I was deeply involved with BHP Billiton for many years in the Olympic Dam projects, looking for mineral deposits of all sorts in exploration, drilling, stope mining, all that sort of jazz. Now, are you finding it? Is it more and more difficult to find these gold deposits as time goes by, do you think?
It is, and I would say a lot of the near-surface high-grade deposits have been found. So we're looking at, near-surface low-grade deposits that require bulk tonnage mining, more significant capital, or we're going deeper in more remote regions of the world, maybe assuming more political risk in parts of the world that hasn't seen a significant amount of development. So it's become a trickier business, and what that's translated into is longer lead times to production. So, from discovery to first production typically can be 20 years or more, and can go through various hands before a project is developed. Quite often there are 3 or 4 or 5 owners of that project before it becomes a productive mine.
Yeah, absolutely. Now, does the value proposition in gold increase as it changes hands? Like we're saying that it's harder to find, therefore it's harder to mine. Is that where the value proposition is, or is that dependent on the stock exchanges? How does it work? Where's the value in gold? Why is it so valuable?
Well, gold is extremely scarce. It's called a precious metal for that very reason. It's very difficult to find. There's very minute quantities of it in the Earth's crust, and there's very little of it that's actually produced. If you look at all the gold that's ever been produced, it's about 200,000 metric tons. Volumetrically, just to give you a sense of what that looks like, it's about 4 Olympic-sized swimming pools. It's not a lot.
Not much.
And we only mine as an industry about 4,000 metric tons a year, which is, a very minute quantity. So you can imagine how difficult it is to find, how difficult it is to extract, the capital intensity required to do so, the operating cost risk, political risk you're assuming. It's a tricky business, and it's not for the faint of heart, that's for sure.
Are there any peripheral minerals that you get involved with just inadvertently as you're mining? Do you like silvers and things like that?
Yeah, certainly. In gold deposits are quite often found in polymetallic settings, and you're looking at complex metallurgy with multiple countable metals produced. Quite often, you're producing both a doré and a concentrate. It's not uncommon to have multiple metals in the deposit that's primarily gold.
Now, you led the largest merger and acquisition in gold mining history. It was $32 billion. I'd love to hear that story. Would you mind sharing it with us?
Yeah, look, this was a little over 2 years ago now when Corp merged with Newmont to create the biggest gold producer in the world, both in terms of production, about 6 million ounces a year, and also in terms of market capitalization. Now, with gold having run, that company on a combined basis is 3 times the size that it was when we merged.
Wow.
And so that was really about creating scale and creating sustainable production levels. And so if you harken back to even 2018, Barrick announced an at-the-market merger with Randgold, and both of those companies were dealing with precipitous drops in their production on a standalone basis. By combining, they created critical mass and allowed them to focus on a nucleus of production that could sustain the longer term. Newmont saw that as an existential threat and was concerned that Barrick would surpass them both in market cap and in production and then make Newmont vulnerable. And so Goldcorp is kind of a second-tier senior producer, really, heard the music playing and decided we needed to find a chair. And so we merged with Newmont to create the biggest producer. And now I think really the merging at the top of the food chain is by and large done. Both of those companies are now at a sustainable production level. When they combine their portfolios, they wean themselves of the non-core assets and focus on the ones that could sustain higher production levels for longer. And so now the scope for consolidation can be found, I think, in the next level down in mid-tiers. There's a lot of mid-tier companies, a lot of emerging single asset producers that really don't have the critical mass that they need to attract market attention from generalist investors. So I think when the COVID crisis has passed us and there's more opportunity to do physical due diligence, I think there's pent-up consolidation that's likely to happen in that mid-tier space.
Yeah, fantastic. Now, I know there'll be a lot of investors, small-time, medium-sized investors and the likes, and you being an investor yourself, how important is it to diversify your investment portfolio, do you think?
Well, it's a very uncomfortable position to be when you're a single-mine company. When things go wrong, there's nowhere to hide. So having that diversification is important so that you can spread the risk across multiple operating assets. But also, scale is important. What we failed to do in the gold sector, in spite of the fact that we've had a nice run over the last couple of years, is really attract that incremental generalist investor, ones that can buy Apple, they can buy financial institutions. They look across the broad spectrum of equity investment opportunities, and gold has to compete with that. And the gold industry, on an aggregate basis, is still smaller than Apple in terms of market cap. So we don't have nearly the liquidity that some of the other sectors do. So creating that scale is extremely important to attract the generalist investors, to show up on the right indices, to get that passive capital as well allocated. So it's really important to create scale, to have that liquidity and get into the right indices and attract that generalist investor. So that's why I think the industry, given how small it is, really needs to look at merging to create that critical mass of scale and diversification within the operating portfolios that they manage.
This is a wonderful call thus far. Thank you very much for all the knowledge and information you're sharing. Now, I'd love to know, if we can pivot, why did you join Gold Royalty Corp? What was the momentum behind that?
Yeah, it's interesting. I've been studying the gold sector, obviously, for my entire 30-year plus career. And what we find ourselves at is an existential crisis in the gold sector, with reserves experiencing a precipitous drop of nearly 40% in the last 7 years. And that's just come through depletion. The industry exited the last bull cycle 10 years ago with a lot of debt, a lot of cost escalation, and as a result, investors demanded they focused on harvesting returns from their existing asset bases, deleveraging, and generating free cash flow and returning dividends to shareholders, buying back stock. So the industry has done a great job in that regard. It's deleveraged. In fact, for the first time in my career, the entire industry is at net zero debt. So they've done a great job of really managing their balance sheets, and they pay good dividends. But what they haven't done is reinvest back in exploration to replace those depleting reserves. And so really what that tells me is the industry is going to have to refine its skill set in mine development and exploration and start to allocate meaningful capital to replace their depleting reserve base, because that will translate into significant drops in production over the next few years. So what I've tried to do is position myself at that end of the spectrum in terms of what would support development and exploration. Well, royalty companies do, because royalties can access capital much more cheaply than the established producers can do. And what they do is then put that capital to work to help stimulate both exploration and development and take royalties back. And so really I position myself in Gold Royalty Corp, anticipating that the established producers and the emerging producers will have to start to allocate significant capital to mine development and exploration. And we're there to effectively act as a bank for that type of activity.
Yeah, I'd love to learn, just so people understand this if they're interested in this, is to understand your business model a little bit further, because it's still probably a little bit vague to somebody seeing this for the first time. I'd love to learn a bit about what actually a royalty and streaming company means.
Sure. I mean, what a royalty company does is put capital into the ground by providing cash investments to producers, emerging producers that can't otherwise access capital cheaply enough to realize their growth ambitions. What we take back in return when we make that investment is a royalty on the underlying property, the mine.
Right.
And so we get a percentage, a fixed percentage of the revenue from that mine once it's operational. Typically 1% to 2% net smelter return. In other words, 1% to 2% of the net revenue from the mine as a payback for that capital investment. And what that does is provide our shareholders with double-digit rates of return on that invested capital. So we have to do obviously a lot of due diligence on the underlying asset and the operator to make sure that we can realize that type of return. But what our investors get is leverage to the gold price. So if the gold price goes up, then our revenue goes up. Mm-hmm. Also, we get leverage to the exploration success that our underlying operators and operating partners realize as they drill out their deposits and grow them geologically. So think of it as owning a gold ETF with exploration upside. So you can certainly understand the appeal of owning a gold ETF. You get the exposure to the gold price without having to store the gold. It's done for you. But what you don't get is exploration upside. You don't get exposure to exploration success. So the royalty really provides the best of all worlds. It provides that leverage of the gold price, leverage to exploration. But what it also does is insulate our shareholders from the underlying operating cost and capital cost risk of actually operating a mine, because we have no exposure to that. Our exposure is entirely to the top line, to the revenue.
Yeah, fantastic. I always think about sustainable mining. I'm wondering about net zero emissions and net zero water consumption. What's your take and involvement in that side of things?
Well, we don't operate the mine, so we don't have direct ability to actually ensure that ESG practices are at best practices. But what we can do is, before we actually make the investment, is utilize stringent criteria to filter out the operators that don't pursue best practices on ESG. So we just won't, frankly, take a royalty back on an asset that isn't run by a capable and responsible operator.
Makes sense to me. Now, in terms of where you're operating, where are you? Are you global at the moment, or is it?
We're America's focused. We're as far north as Alaska and as far south as Brazil. Mm-hmm. And we have royalties on 18 projects across the Americas.
Yep.
Various stages of development. And as I said, they vary from 1% to 2% of the revenue. And right now we're focused on the Americas, but our mandate is global. We're willing to look across the world at deposits that have good geological models with significant exploration upside, because really that's what supercharges returns for our shareholders. While we have minimum return criteria of 10% on known reserves, we don't pay for any of the exploration upside. That's the gravy. That's really what supercharges returns over time.
Yep.
So we have to be comfortable that these deposits have significant exploration upside, but for the drilling. So once these operators start to focus on exploring and growing out their deposits, and it's in their interest to do so because they build out significant physical infrastructure, they want to leverage that infrastructure for the long term, they're going to spend that money on exploration to leverage that infrastructure, and we'll benefit from that as they realize their exploration potential.
Yeah, fantastic. Now, you talked about putting the right bums on seats earlier in the call. I'm wondering if we can, shift again and talk about the management team that makes up this wonderful organisation, because I think that's important for context. Would you mind sharing a little bit about the people that you work with?
Absolutely. It's not a big team, and that's the beauty of the royalty business. It's eminently scalable. You don't have to inflate your G&A significantly to grow your business, because at the end of the day, we're not operating the mines. We're taking interest in them. We're acting effectively as a financial institution.
Yep.
But that being said, when you look at the board management at Gold Royalty Inc., we have collectively over 250 years of mine operating experience. So I'm not talking about financial experience. I'm talking about mine operating experience.
Yep.
Yeah, and over my 30-year career, I've run 2 major companies. I've been involved in 4 major companies, 3 of them in the C-suite. Mm-hmm. And I've been involved in the construction of 15 separate mines over my 30-year career, and I've been responsible for the operation of countless more. Also on my board is Alan Hare. Alan was my successor at Hudbay as CEO. He was my chief operating officer when we ran Hudbay. 35 years of experience as a metallurgical engineer, and he's a prolific mine builder. We built 3 major mines when I was running Hudbay, and he was the gentleman that was directly responsible for that. Also within my management team is John Griffith. John comes from an investment banking background, but from a mining family from South Africa. And John was the head of the mining group Bank of America Merrill Lynch in the Americas before he joined us as our chief development officer. Also on our board is Warren Gilman. Warren runs Queens Road Capital out of Hong Kong, which is Li Ka-shing's Natural Resource Fund. Before doing that, Warren was an investment banker with CIBC in Canada and Australasia, running their mining group for many, many years, and so knows the business inside out, has a technical background as well. So, and then finally, Ian Telfer is the chair of our advisory board. Ian was my chairman at Gold Corp, but also was the founder of Wheaton Precious Metals. He spun it out of Gold Corp 15 years ago, and Wheaton is now the second biggest streaming and royalty company by market cap. And it's exactly the same model that we pursued at Gold Royalty. We've replicated. Wheaton Precious Metals was spun out of Gold Corp with royalties initially on some of Gold Corp's assets, and then started to diversify away from that and grew to the company it is today. So I'm leveraging Ian's expertise in doing precisely that as we spun Gold Royalty out of Gold Mining Inc. with royalties on all dozen of their projects to provide a foundational element to Gold Royalty as we look to grow the business beyond that. And just a couple of months ago, we completed an IPO for Gold Royalty. We raised $90 million US.
Wow.
Have a post-money valuation of $200 million US, or a market cap of $200 million US. So we have a strong treasury with no debt on the balance sheet. We have a staffed out team, and we're looking at putting that capital to work for the benefit of our shareholders.
There are some very sharp tools in that shed, that's for sure and certain, and some very some bright horizon there also. I'm wondering, what is the tickers for this organization?
It's a GROY on the New York Stock Exchange, and you can find more information about us at goldroyalty.com.
Fantastic. Look, if you've been listening into this call and you've taken anything away, fantastic. There is certainly a lot to learn. And if you want to learn more about goldroyalty.com, there will be that URL below this post. No matter where you find it, you will find the link back to goldroyalty.com. And with that all being said, David, thank you so very much for spending some time with me on the My Future Business show today.
Well, thank you for your time, Rick. I enjoyed it very much.
Thanks for joining us today. If you enjoyed the call, then make sure to subscribe, leave a comment, share us with your friends, and book your spot on the show at myfuturebusiness.com/interviews. And if you're looking for solutions that will help grow your business, then visit myfuturebusiness.com/shop.